Hello and welcome to the end of the week for the 31st of July 2017. In fact, I'm going to skip Monday and actually just look at the first 4 days of August because there's been a very big change in macro thematics, particularly around central banks. I will cover a few other bits and pieces, but central banks are always what's very interesting in the first week of any month, and August has been particularly so. There's three banks I really want to highlight. Let's start with the main one. Let's look at our own, have a look at the RBA. Tuesday was a really big change in terms of what we saw in the statement. Tony and I did a fairly big piece on that on Tuesday, and I recommend you have a look at it. Reason for it, it is clear that they are now very cognizant of the exchange rate, and that is part of their thinking that it is now possibly a headwind, not just for inflation, which we've spoken about many, many times, but also wage growth. It's also employment headlines and then growth as well. So the statement of monetary policy, which is out today, clearly shows that although they've kept it at 3%, the time frame is extending, and any further movements to the upside in the Aussie is clearly going to actually impede that even further. So that's why at the moment the Fed becomes so important for us here in Australia. It's a really unfortunate scenario to find ourselves in, that our central bank can't really do anything at the moment. They've pretty much told you that they are beholden to the exchange rate, that they're not going to move the cash rate, and they have really no other sort of macro-prudential tools or even levers that they can pull to really pull that down. So watch that space. Certainly very interesting, and one now that's probably part of the overall strategy you need to look at in terms of not just with your FX and sort of your macro thematic themes, but also just investment in your portfolio. That headwind in the Aussie goes on two sides: the tailwinds you've got from US dollar earners, but also those commodity stories that have the US dollars on that side. I want to also highlight the BOE, and the reason I want to highlight the Bank of England is that it's actually a really good case in point of how realistically banks at the moment are freaking themselves out. And the reason I use that terminology deliberately is that unless the textbook theoretical economic environment comes about, they're not moving on rates. The Bank of England was probably the next bank in line globally to move rates to the upside behind the Fed. And yes, they're blaming it on Brexit, and yes, they probably have a reason to do so. But if you actually take that out and look at the underlyings in the UK, things are actually not too bad. The economic growth is there. Inflation is actually quite reasonable in the UK. Wage growth is reasonable. I think what they're highlighting is the fact that outside of London, things aren't that rosy, which is probably another good reason. But in the main, they've now pushed expectations to raise rates over there out to November 2018. If you look at us here in Australia, we're out to mid 2018. So they're now way behind us in terms of expectations to the upside. And it just shows you that at the moment, central banks are really, really unsure about how to manage this current scenario, because it is like nothing we've really seen before. Although we've got really good employment globally, and we saw that with the non-farm payrolls, which will come out tonight, they will be very strong. But if you have a look at it, overall, things are quite good, yet wage inflation and wage growth globally just doesn't exist, and it's not a scenario that we've really experienced before. It's also the same if you look at the trade balance, and that brings you back to the next part to look at. Trade balances are fluctuating between really strong and then sort of weakening away. Australia showed it yesterday. Our exports declined by 1%, whereas our imports increased by 2%. That compares to the month before where they were absolutely stellar. So again, just hits that GDP expectation. Again, goes back to the RBA's forecast of growth of hitting 3% sometime in the near future. Looks like it's now going to be 2019, and why it's so hard for them to forecast and therefore move rates. So real interesting principle, and that's why the first 4 days of this month have been really, really astounding in terms of the big changes there. And that therefore means that FX markets and also particularly bond markets are almost free to move in their own sort of way and tangents, sort of using the underlying thematics for looking at us here in Australia. We're a carry trade play. We're also exposure to China and Asia. If you look at the US, it's that safety, and then you look at somewhere like Japan and also somewhere like Switzerland, which also saw a bit of a movement in on the carry trade unwinding. So there's so many different thematics and so many different trades going on at the moment. It's a really interesting sort of scenario, and that's why the first 4 days of August have been quite astounding and ones to watch over the next couple of weeks.
At InvestSMART, our mission is to help millions of Australians to protect and create their wealth. This is why we now offer a life insurance comparison service. All you need to do is answer a few questions, select your cover, and compare the results. You can compare the benefits of each insurer with our easy-to-use comparison feature. For more information, visit our website or just give us a call.